Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Wednesday, January 24th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. Big picture reminder, just so you know, we came off of this long-term resistance about a month and a half ago that is presently 254.40 and dropping. That channel top has a channel bottom, presently at 176 and a quarter and dropping. And since the testing a month and a half ago, following the testing, during the testing of the 254.40 channel top, I'd mentioned how you should allow for this 176.25 channel bottom as a 3 to 5 month possibility. That possibility shifted into a probability when we settled a week and a half ago below the rising channel bottom speed line combination on the daily chart that is at 227.89 to 229.35. So once again, holding below the upper 220s, we're expecting the mid 190s within 2 to 3 weeks. We're about a week and a half into that, and the upper, soon to be mid 170s by the end of February, I think is likely, and that is what we're seeing. And so let's jump to kind of the daily chart right now, that we have this descending channel top, 4 weeks in the making at 213.83. This is our resistance for the day and quite possibly into next week. 213.83, able to contain session strength, below which we could test 202.80 within the day, where a daily low can be placed. But just know that we're not expecting 202.80 to hold anything longer than a single trading day. And if we settle today below 202.80, our longer term objective, or I should say our 2 to 3 week objective at 194.07 is likely to be realized within 1 to 3 days or so of closing below 202.80. 194.07, we have it as a 4-star support. There's a part of me that really wants to shift it back to 3 stars. And we'll probably do that actually over the next few days. Yes, can contain weekly selling pressures, but can it contain monthly selling pressures? A longer term double bottom? I don't see it. I think we can bottom out at 194.07 for a day, a week, and trade sideways, back into the low 200s perhaps within 3 to 5 days. But, 194.07, just a weekly support level, really. And if we close below it, we're another 1 to 2 weeks away from reaching our big picture objective at 176.84. So, as we were testing, and I mentioned this before, the 254.40 channel top about a month and a half ago, I was mentioning how you might consider reaching out for 180 or 170 strike out of the money puts that don't expire for at least 6 months. And that is still the case. And in fact, it was the settlement a week and a half ago where we mentioned it again. That doesn't expire. The 175, let's say, strike out of the money puts that don't expire for at least 2 to 3 months now. And, so on the way down, 194.07, we can bounce here nicely. But if we close below it, just another week or two, we should test our targeted 176.84, where we can bottom out, really well into the second quarter. From here, we can round back up again, and I'll back out of this and show the weekly chart again that we could trade inside of this channel structure for many months to come, into later year perhaps, especially if we test 176 and a quarter over the next, say by the end of February, then we round back up, takes us 2 to 3 months to test the channel top. That'll put us into May, really, April, May, back down again. And that is the possibility here. So that is that. Let's get back down. Let's get back to the daily chart itself. 213.83, able to contain session strength. This is a solid day trade level and potentially a 3 to 5 day swing trade, because off of 213.83, we could fall all the way to 194.07. over the next 3 to 5 days. That is not a stretch. In fact, volatility is such that that would be certainly allowed. And if we close below 202.80 today, we should see 194.07 within just another day or two. Now, if we push or if we open above 213.83, I do see 220.64 as a likely intraday target. That is a new descending 1/3 speed line that is based on Monday's low. It can contain the balance of buying pressures for the day, but if we do settle today above 213.83, I see that as at least a sign to exit a short position. If your short position is anywhere from 1 to 3 days or a 3 to 5 day scenario, closing above 213.83, I think you should liquidate that short position, because I see the market then in reach once again of the upper 220s within 3 to 5 days. In fact, you could go long 213.83. If we settle above it, you could go long 3 to 5 day swing traders into the upper 220s, where 3 to 5 day swing traders can go short. 3 to 5 week swing traders can go short, because once again, holding below that upper 220s does maintain a 3 to 5 week target at 177.25 roughly. That is a 5/8 downside Fibonacci. It's actually this channel bottom at 176.84 and dropping. That is our 3 to 5 week objective. I will mention that if over the next week or so we happen to settle above 229.93, then I see that as a good January low. 244.91 likely then over the following 3 to 5 days, and over the following 1 to 2 weeks, I would anticipate yet another test of this 254.40 long-term resistance area, where we can tap out, through March, fall away once again, and if settled above, would represent a meaningful long-term buy signal as we move through the second quarter and even into later year. I think that pretty much rounds out. I'm trying to think if there's anything else that should be said, and I don't think so. All the minor points have been carefully chosen. They're very tradable for aggressive day traders. Aggressive day traders trade more than one trade of the day. They trade throughout the day oftentimes, scalping anywhere from a half to 3 points, for instance. And so these points are well suited for that endeavor. But in terms of the trade of the day, it's selling 213.83, buying 202.80. Closing below 202.80, you're shorting the market down to 194.07. Inversely, closing above 213.83, 3 to 5 day buy signal. 3 to 5 day swing traders go long, stay long into the upper 220s, where a sell opportunity presents through February activity. I am going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com for that 5-day free trial. I'll be back tomorrow with Thursday's Tesla.